Hello, everybody. Good afternoon. It's the 17th of December here, 2022. I felt like it was important to have a little bit of an educational video here just to discuss leverage trading and the danger that it faces. So what I want to do is talk about a few different scenarios here. Both going long and going short on anything in the crypto atmosphere, whether you're doing any kind of leverage trading on Bybit or BitMax or Binance, whatever your trading medium might be. I do want to talk a little bit about, how this leverage really affects the overall trade. And I think it's important for especially new people to understand this. So before I get into all of this, this is all just educational. This is not financial advice, and it's just my opinion. Some of my numbers here might be just a little off, but the concepts themselves do remain the same. So let's go ahead and just take a look at this. I've got Bitcoin on here, right? I want to talk about just a general thought. If we're taking a trade, I'm going to go back here to this pivot low here and this pivot high right here. Okay, so we're looking at this. And what we ended up seeing, like right around here, we saw some support at the 50%, right? So that looks like, a trade, we're finding some support here at the 50. So let's go ahead and take a long trade there. So let me just kind of zoom in on that, right? So we're considering taking a long trade here at the 50. And, maybe you've got some indicators that are saying, this looks like a good place to buy. So let's go ahead and, try and see if we can define some risk. All right, so again, you're finding some support here, and then you're like, all right, we're here at the 50, so I'm going to go ahead and place an order right here at the 50, right? And I want to do a stop loss at the lows, so that's right here. And of course, with anything, where's your target? I'm going to go ahead and say, yeah, my target's going to be up here at the negative 236. All right, so that's going to be, up there. That's a 30% trade. All right, so that's really great. But I think where a lot of people miss out is they focus too much on like what they can make, and they don't focus enough on what they're putting at risk. They don't focus too much on what you can lose in a trade, and I think that's the more important thing to realize. So taking this trade, the risk profile is actually pretty well defined. You have a 1.58% loss potential here, which that's not that bad, but when you see people taking trades where you're doing like 5x or 10x or even 30x leverage, if you're talking a 1.58% risk, right? So let me put this over here. So we're talking about a 1.58% risk. All right, let me make this just a little bit bigger so we can see this. You have a 1.58% risk. Now, if you're taking, say, 5x leverage, all right, what that means is you're basically taking your money, let's say you have $100, and you are borrowing money from the exchange in order to trade with $500, okay? So you're trading with $500, which magnifies your losses by 5x, right? So by 400%. So if you are trading with $100, your risk of loss on 1x leverage would equal $1.58 loss, right? On 5x leverage on a 1.58% risk, that turns into more. That's about $7.60 or so. I'm just estimating here. I don't have a calculator open. So let me go ahead and pull that up. So 1.58 times 5, 790, right? So that's 790, which is 4 times the amount of what your loss would be right here. So it's, 1.58 times 5, that's your $7.90 loss. Now, certainly your reward would be great, right? Your reward on this would be really, really good. But let's say you're not talking about doing 5x leverage. Let's say you're talking about doing, 25x leverage. What does that then turn into? Well, that $1.58 times 25 now turns into $39.50 loss. And when you're talking about only trading $100, once you take out that $39.50, what are you left with? You're left with $60.50, which means you lost 40% almost on that trade at 25x leverage. Because again, 1.58 times 25 is 39.5, right? So just keeping the numbers the same, you've got a $39.50 loss on $100, right? So you're now left, instead of having $100, you're left with $60.50. Now, that may not sound like a lot because I'm using simple numbers here. But if you're trading with $1,000, instead of losing $39.50, well, now you're losing $395 instead of potentially only losing, $15.80, right? Again, if we flip this to trading with $1,000, that would be a $395 loss, right? Which leaves you with $605 instead of the $1,000 that you had, in which case this would turn into $395 loss. This would turn into a $79 loss, and this would turn into a $15.80 loss. So what I'm trying to get across here is the danger of using high leverage, because at some point you have a liquidation level that you have to pay attention to. You have a liquidation level where you are going to lose all of your money, right? And on 1x leverage, right, that number is going to be very, very, very low. But if you're doing 5x leverage, it only takes a 20% move to liquidate you completely. So if we were to find where that 20% threshold is, you would have to take a decent move down in order to liquidate you. But the problem is, let me just go ahead and zoom out here. Looking at this, you would have gotten, if you held the position, right? So if you are one of those people that, holds on to hope that your position is right and you're right, and you don't take a stop loss, that trade would have gotten stopped out, and really it would have gotten liquidated. So on, again, on a 5x leverage at 20%, you would have gotten liquidated roughly, right? But a lot of crypto traders don't trade with 1x or 5x leverage. A lot of times they trade with more leverage, right? Because, maybe they don't have a lot of money and they want to get rich quick, right? That's very, very common. Okay. So let's say we change this to 10x leverage. So if you go to 10x leverage, it doesn't take a 20% move anymore. It now only takes a 10% move. Move this up, 11, 10% right there, right? So you would have gotten liquidated on this move right here. It didn't violate the lows, so your trade could have been great, right? And what ended up happening? Well, the price ended up actually bouncing significantly out of here. But if you're trading with just 10x leverage and you didn't have that stop loss, you literally lost all of your money. The point that I'm trying to illustrate is when you enter a trade, you need to make sure that you go into that trade understanding what you can lose. And again, just being very cautious to trade anything with a significant amount of leverage, right? We all know that trading options in the stock market are trading with a significant amount of leverage. You can have really, really big return, right? But the risk is that option going to zero if you don't sell it. In this particular case, I didn't have to close out of this position at all. And it closed for me because I was forced into bankruptcy on that position. Liquidation and bankruptcy, they're considered basically the same thing in my book, because whatever you put into that trade as risk, you lost it all. And then in that particular case, if you had $100, right, that you put into this trade, or $1,000, as soon as it gets down here, the reason why liquidation levels exist is because you borrowed money from the exchange in order to put into that trade the larger size. You don't have that money. The exchange had that money. They borrowed it, or sorry, they let you borrow it from them, and they're going to force you out of that position, and they're going to take their money back. They're not going to put any of their money at risk for you. That would be silly. That would be ridiculous. So you borrow the money from the exchange, and the moment that you lose all of the money that you put on the table, that's where the liquidation hits. That's where you get closed out of that position. The exchange gets their money back, and everybody walks away. You walk away unhappy because you lost all of your money. The exchange walks away happy because they got some liquidity in their market. And there is also a potential that the exchange could have made money off of your liquidation. So we're not going to talk about that, but that's also something to consider. So again, I mentioned this because, we do take trades in our server where we talk about crypto trades. And I want to make sure that everybody does understand the difference between, a 1.5% stop loss on 1x leverage versus a 1.5% stop loss on 5x leverage or 10x leverage. You have to be very careful because the higher the leverage you go, the smaller your liquidation level becomes. If I go at 25x leverage, you're only giving yourself a 4% leeway. Let me move this up here. Where's 4%? It is right there. Okay? If I took this trade at the 50 and I put my stop loss at the 618, I might as well, not take the trade if I want to go with high leverage. Because at 25x leverage, this would be actually the liquidation threshold. You would have lost all of your money before you even hit your stop loss. So again, pay attention to your trades when you take them. Pay attention to what you can lose. Don't focus on what you can make. Certainly, you need to make sure that the risk to reward profile is good, right? In this case, the risk to reward profile on this was really good, right? Because it was a 7.5 to 1 trade, right? That's a decent risk profile. But with a high leverage, it's not. Because what's your risk at that point? Your risk is everything, and you don't want to risk everything on a trade. Because if you do that, you will not survive to trade tomorrow. You have to go into a trade or many trades and spread things out, and then make sure that each trade that you take has its risk clearly identified. Now, certainly with 25x leverage, this 30% reward is really great. But what are you risking? That is what you need to pay the most attention to. Let's move over here. So, right now on Bitcoin, and a lot of alts look, really pretty similar to this. Let me just go ahead and pin the bottom, go up here to the top. What ended up happening here? We bounced off the 618, right? So if I'm wrong, and I could be wrong, right? If I'm wrong, and we go from the 618 and we go up here to the negative 236 extension, well, this type of a trade, if we were to maybe wait for it to come back down here, we set our stop loss maybe at these lows over here. Now, I'm not taking this trade. I'm just giving a hypothetical right now. We're looking at a trade to go up here to that negative 236 at about 19,100. Well, we're bouncing off the 618, which makes a lot of sense, right? We talk about the 618 pullbacks all the time. But what is the risk? Okay, so if we put the stop loss down here, at say 16,000, right? I've got like 15,991 here, which is this low. That's a 3.24% stop loss. Okay, well, if you put $1,000 into the trade and you get stopped out, you're basically going to be losing $32.40. Is that right? Yes, $32.40. But if you're now changing that and you're taking 5x leverage, well, it's 3240 times 5. You're now losing $162 of your $1,000. That is pretty significant. And that's only with 5x leverage. You're losing 16% of your account instead of only losing 3.24% of your, I shouldn't say account, I'm just saying of your position. If you put $1,000 into a trade and it goes that 3.24% against you, and I'm only talking 5% leverage or 5x leverage. Again, most crypto traders don't trade in leverage that is less than 10x. If you do 10x leverage, well, that 3240 times 10 now becomes $324. You have now lost a significant portion of your working capital that you have in that trade. Now, certainly the liquidation, you won't get liquidated on this trade unless you do around 30 to 35x leverage, right? But even on a 10x trade, you're losing 32.4% of your position. That's $324 on a $1,000 trade. I bring this up because it's important for us to keep this in mind for risk to reward. And I want to make sure that, if you're new out there in the market, that you're paying really close attention to what you can lose, not what you can make. Because although making money is the game, the main part of the game is not losing everything. And you have to go into a trade with a plan and an understanding of what your risk actually is before you get into that trade. Otherwise, you're going to find yourself upside down. You're going to find yourself liquidated, and nobody wants that. Okay. That's all that I've got. So I appreciate you guys watching today. Hopefully this was helpful. If this was helpful, feel free to share with your friends. We'd also like to have you in our Discord as well if you're not already there. And last but not least, wherever you are in the world, I hope you're having a good day, a good night, and a great evening. Take care, everyone.